Hello friends, welcome back. Let's take a look at Ethereum together. As you can see, there's quite a bit of mess on the chart there. I have the 2-day time frame open at the moment, and we will go on in and take a look in closer detail in just a second. But before we do that, I wanted to send out a big thank you to everybody who's subscribed recently, and also say, look, we're coming up to 800 subscribers. Be the change you want to see in the world. You never know. Maybe you want to see to be the people pushing over 800. You know, I'd massively appreciate it. Obviously, I'm aiming towards the 1,000. It's a weekend today. When I get to 1,000, I'll consider taking the weekends off. Please don't let the idea of me not having weekends put you off subscribing, thinking to yourself, if I don't subscribe, then Rocky will keep doing these 7 days a week, because all that'll do is lead to me burning out in the longer term. So I've obviously been doing this every day since the start of the year and hoping to eventually get, a couple of days off. Anyway, great. Let's take a look at the charts together. Thank you so much for tuning in. Now I'll just leave it on the 2-day for now, shall I? Take a look at some oscillators, see that overall, as we come up and put in these highs versus these previous highs on this upward movement, that we've done well. The prices have done it without the bearish divergence here on the RSI, and yes, it got a touch of it on the stochastics, but the DMI it also managed to avoid having any bearish divergence, so that's all good. Drop back down to the 24-hour time frame. Different story. You can see here that the previous high over here to the high that we just had was actually we can see bearish divergence on the RSI and the DMI. Now on the stochastics, it was quite a close call again. Let's just bring it up. And you can see, but actually, again, looking here, it was actually bearishly divergent. So the 2-day time frame kind of giving us this idea that maybe everything's going along swimmingly. Going up towards the weekly time frame and looking at this and saying, well, how did it look all in terms of the weekly? Are we coming in here for weekly bearish divergence or anything like that at the minute? No, not necessarily. No, that's not the case. But on the weekly, we've got a downward trend, in general, and we can see here between the last two lows. I think this was slightly lower. Yes, it was. That there was bullish divergence. So, what we're still hoping for is for a weekly trend thing to pan out and that for eventually the prices to move up above the 278 area of the previous week. And as it's the weekend just now, I just thought I'd start off by looking at the bigger time frames because, here we have, the weekly chart. It's the weekend, yada yada. This will be closing tomorrow. Can it essentially close above the 230 area and maintain this over the weekend, looking towards next week and asking the question of, will we maybe go sideways a little bit longer, fill out this channel in terms of the weekly time frame just a little bit more and then move towards the upside? That's a possibility. And these targets in around the COWABUNGA zone are still very much a possibility then if that's the case. Going down to the low time frames now, just to begin with, so that actually the 12 hour, so we can see our friend in here. What do you prefer? What do you think he looks best on, the 12 hour or the 4 hour? On the 4 hour, he's got that big wider face, and maybe the smile is a bit more smiley. But then on the 12 hour, the 12 hour looks a little bit more gormless, doesn't he? But maybe that's more accurate. And see, when I hover over him and he gets the eyeballs right on top, isn't that perfect? That's some huge digression. Okay, I'm just having a laugh there, but I really just wanted to spend a minute in this area instead of talking about the levels, talking about COWABUNGA zone and our pal, because he does look like a bit like one of the turtles. On the 4 hours, better for the turtles. So what we call who is he? Donatelli, Leonardo, Raphael, or the other guy? Which one is this? You can tell me down below in the comments. Anyway, yeah, I'm just basically wanting to kind of, with humor, point out that this is what we're going to call the Hey Pal zone. We very much could have the prices come back down to revisit this area yet again. They could do that. In terms of looking at this from the shorter time frames, the 4 hour time frame, looking at these highs over here, on the way up to this most recent of highs, it's not divergent there. But compared to our previous, it's not divergent on the way up here. But compared to our previous high, we never made it back up there towards that 250 area. We did. We made it to 250 slightly. Of course, that was a decent area for shorts, like we were saying at the time. Not financial advisor, no, that's financial advice. But we didn't make it back up to our white line here, which we were looking to see in terms of if things were to become bullish, you'd need to see opens and closes above there. And we didn't have that. We didn't actually manage to sustain price action outside of the symmetrical triangle up here as well. We had one little close outside of it, but then straight back in again. And then actually, we've got a lower low compared to over here. That's not a bullishly divergent lower low. That's just all, that's just working out fine in terms of the bearish case scenario. scenario. So if you're bearish and you're looking at this and saying, well, maybe we peaked out over here, we've had this upward price movement, but all that did was come in to put in a lower high, and this is a low, this is a lower high, this is a lower low, and whatnot, then how does that look in terms of divergence? And you can see here that, well, this was perhaps hidden bullish divergence here as part of this upward trend and this low here, or whatever, as you can see. But just looking at this, it's not actually bullishly divergent between these two last lows in terms of the divergences on the RSI and whatnot. So, still looking towards this and saying the key areas are 230, 225, Cowabunga zone in here. Cowabunga zone really comes in with the lead up to fake out territory in this whole area, here, where you could have another one of these guys, and this one could say, hey, are we faking out or breaking out in this territory here? So that's what this guy has to say for himself in this area, if it comes down to here. And then thereafter, looking down below this 216 area. Now, the reason why 216 is important is because that's where a 236 Fibonacci retracement is. Go back up to the 24-hour time frame so things can be looked at a little bit easier. Oh, wow, look at that. He's an ugly guy, isn't he? If we go down below this 215 area, then of course, then that starts to be saying, like, that's where I'm going to end my chat about breakouts. You've got the 50 simple moving average coming in here, or fake out, sorry. You've got my 50 simple moving average coming in here at that 236 as well. So should the prices break down below this here, then I would expect further continuation towards the downside, with perhaps the prices coming in again at our three downside targets of 193, 185 and 176. I've just basically been saying 195, 85, 75 there for that as well. And in fact, actually, there's another one at 165 thereafter too. There's a few things as well that could lead towards this happening in terms of measured moves like we have over here. And all that sort of thing. At the minute, in terms of this one, we spoke about this yesterday, but, if you're looking at measured moves, what you're really supposed to do is take it from 75% of the measurement. Nobody does that in YouTube land. That brings us up to there. So we actually had the full measured move off the back of the symmetrical triangle, came back up though, got rejected by it, and we've not made our way back into there yet. It is operated as resistance. So the question remains, will we actually go on down the way? Breaking down below this means that we've got a sort of channel breakout, in which case, you could be looking down the way towards our targets down here at the 185 area. I'd say that a good profit taking target, of course, for people to be aware of on the way there would quite obviously be $200. Not financial advice. I'm not a financial advisor. Now, that's all the bearish side of things. In terms of being bullish, you'd want to look towards the 240 area. Can we break into the symmetrical triangle zone again? Perhaps create something else out of it. Maybe perhaps in the longer run, look for this and say, okay, so I'm willing to be bullish on this. I want to be bullish on this for just shorter term movements, not necessarily breaking out even past our 250 area yet again. And you could turn this into a descending triangle if that was your desire. Of course, as well, you could also turn this into a rectangle top, depending on how things go over the next wee while. So we could always, we'll be bearing in mind all of this in terms of our targets recently. I highly recommend you watch all the videos that I put out and everything, because I explain all these things and go into detail about them and read the book and do the textbook stuff as well. So a lot of the subscribers know all the details about how these things all interact with each other, and you can see there that that's clearly what the case is anyway for us. So clearly the most significant target towards top side is going to be 252 currently, where we have our previous high drawn in with that Fibonacci. Obviously, it doesn't seem to line up with bodies or wicks currently with that, but I don't really particularly care too much to move it. Maybe I did it on a different time frame. Did I? Again, I don't care much to move it. I'm not going to bother. Maybe it's 12 hour or something. I don't know. But this is what we're looking at right now. So, hey pal zone, the Cowabunga territory. Past Cowabunga territory, we're into hey, are we faking out or breaking out zone with our Mr. Hoppy. Mr. Hoppy. Did anybody ever watch Monkey Dust? And Mr. Hoppy. There's a highly esoteric reference that almost nobody will get. There's something for you to YouTube if you're looking for a really bizarre sketch. Really, really bizarre. Mr. Hoppy. Anyway, that's where Mr. Hoppy is in this fake out or breakout zone. He obviously wants to stab you, and then breaking out down below there, then obviously we see our downward side targets upwards. I'm not going to get too concerned about the minute because the upward side always speaks for itself. The trend is a friend until the end of the trend. You know, even coming down here for these other targets wouldn't necessarily be the end of the macro trend because we can still look up towards the weekly time frame as we started the show, like looking at this sort of thing, and say that anything down here towards the $200 is indeed actually a higher low coming in here. So that's it all wrapped up. I think that's pretty damn comprehensive. I hope that you enjoyed the episode. I hope that you agree with me and think that it's worth subscribing to this channel for daily technical analysis. The weather outside is frightful, but this tea is so delightful. Hit that like button, hit that subscribe button, and push us over the 800 area. We do this every day. I hope you enjoy it. Thanks very much for tuning in. I'll catch you next time.